What financial experts won't tell you about money. Ever wonder what financial advisors are keeping you in the dark about money? It's a query that may yield some startling discoveries. What if you knew some undiscovered facts about money management that might change the course of your finances? What if the experts in the mainstream were concealing secrets that lay beneath the surface? This movie explores the dark corners of traditional financial knowledge to find the pearls that have the power to completely change the way you think about money. Are you prepared to learn the hidden facts that have the power to drastically alter your financial situation? The emotional side of money. The complex interplay between our emotions and financial decisions is explored in the emotional side of money. Although it's frequently overlooked in favor of talks about investments and budgets, this area is quite important in determining our financial habits. Feelings like fear, anxiety, and greed can affect our financial decisions, savings patterns, and spending behaviors. For example, excessive hoarding of money due to a fear of scarcity could prevent someone from investing in experiences or future necessities. However, the temptation of rapid enjoyment can also result in rash purchases that undermine long-term financial objectives. Achieving financial well-being requires acknowledging and resolving these feelings. This is something that financial professionals choose to ignore in favor of numerical techniques alone. However, any financial plan may be doomed to failure if we don't recognize and control our emotional responses to money. People can have healthier connections with money and make more sustainable financial decisions by developing their emotional intelligence in financial affairs. Moreover, the effective aspect of money transcends individual actions and influences wider economic patterns. Market swings can be caused by strong emotions like fear or excitement, which can impact investment returns and the stability of the economy as a whole. Making financial decisions with these emotional undertones ignored might result in expensive errors and lost opportunities. Therefore, managing the complicated world of finance requires an awareness of the emotional side of money, in addition to being a personal activity. The importance of mindset. It is impossible to overestimate the role that thinking plays in financial success. Although financial advisors usually focus on doable tactics like saving money and creating a budget, they usually ignore the influence of our thinking on our financial results. For example, an abundant mindset encourages people to look for possibilities to acquire wealth rather than restrictions, allowing them to take measured risks. On the other hand, a scarcity mindset obsesses on limitation and lack, which breeds fear and discourages people from making investments or pursuing chances for personal growth. The process of establishing attitudes and ideas that promote success and financial plenty is known as the positive money mindset. Reframing unfavorable ideas about money, such as the notion that prosperity is unachievable or that money is intrinsically bad, is one way to do this. Positive money thinkers, on the other hand, support the notion that riches may be attained by diligence, astute judgment, and a readiness to change and grow. Moreover, long-term financial success requires a growth attitude. This way of thinking acknowledges that patience and effort over time can lead to the development of financial knowledge and abilities. People who have a growth mindset see failures as chances for learning and development rather than as failures. People can become more financially competent and confident by accepting obstacles and looking for ways to better themselves. This will ultimately result in more financial success. In summary, having the right mindset is just as important as having enough money to reach financial objectives. Hidden costs and fees. Unexpected expenses and charges constitute a substantial yet frequently disregarded facet of personal budgeting. Financial advisors often downplay the costs associated with different investment products and methods, even while they may brag about their advantages. Over time, these hidden expenses have the potential to drastically reduce investment returns and negatively affect a person's overall financial security. Investment fees, which can take many different forms, including management fees, expense ratios, and transaction expenses, are a frequent source of hidden costs. These costs are frequently subtracted straight from investment returns, which lowers the quantity of capital available for expansion. Additionally, it could be challenging for investors to determine the exact cost of ownership because certain investment products have hidden fees that are not made explicit upfront. Furthermore, hidden expenses can also occur in lending and banking, two more sectors of personal finance. For instance, banks might charge for services like wire transfers, ad withdrawals, and account maintenance. Similar to this, credit cards and loans frequently have unstated costs, including balance transfer, yearly, and late fees. Over time, these costs may mount up and cause consumers to incur large out-of-pocket costs. Making wise financial decisions requires knowledge of these hidden charges and expenses. Through a thorough examination of investment prospectuses, bank statements, and loan agreements, People can maximize their overall financial returns by identifying and mitigating hidden costs. Additionally, reducing costs and long-term wealth preservation can be achieved by looking for affordable financial services and investment products. In the end, attaining financial success and avoiding the traps of hidden prices and fees require openness and attentiveness. The myth of overnight success. Stories of almost quick fortune and celebrity have contributed to the widespread myth of overnight success in today's society. When financial gurus showcase amazing success stories without fully crediting the hard effort, dedication, and tenacity required to achieve such outcomes, they may unintentionally contribute to this narrative. True financial success is rarely, if ever, attained overnight in reality. Every apparent overnight success is the result of years of perseverance, sacrifice, and hard work. People who seem to have made quick money or gained notoriety have probably invested many hours in developing their abilities, perfecting their trade, and grasping possibilities. They may have encountered many obstacles, disappointments, and defeats along the road, but their dedication to their objectives kept them going on in spite of the difficulties. In addition, the myth of sudden success downplays the significance of long-term, steady progress. Even though it can be enticing to pursue short-term gains or get-rich-quick schemes, they frequently turn out to be ephemeral and unsustainable. A strong foundation of sound financial principles, cautious decision-making, and consistent execution over time are the cornerstones of true financial success. Dispelling the idea of overnight success and concentrating on the actual requirements for achieving long-term prosperity are crucial. This entails establishing reasonable objectives, creating a detailed plan of action, and being prepared to invest the time and energy necessary to achieve success. Regardless of how long it takes to get there, people can achieve enduring prosperity and fulfillment by accepting the journey and making a commitment to constant growth. The role of privilege and systemic inequality. In personal finance, the influence of privilege and systematic inequality is a crucial, but sometimes disregarded topic of conversation. Although financial advisors could offer tactics and recommendations that presume an even playing field, the actual situation is far from fair. An individual's financial prospects and achievements are greatly impacted by factors like ethnicity, gender, socioeconomic status, and access to education. In its different manifestations, privilege can provide certain people advantages over others. People who are born into wealthy households, for instance, might have early access to better financial resources, networking opportunities, and education. In a similar vein, members of dominant racial or ethnic groups might encounter less prejudice and obstacles in the financial system than members of marginalized groups. On the other hand, discrepancies in access to financial opportunities and resources are sustained by structural inequities. The wealth disparities between various demographic groups are getting wider due to historical and structural impediments such as discriminatory lending policies, unequal access to high-quality education, and underrepresentation in important industries. For underprivileged communities, social mobility is impeded by these systemic inequities, which also serve to maintain current power arrangements. Building a more equitable financial system requires acknowledging and resolving the role of privilege and systemic inequality. It is imperative for financial specialists to recognize and actively endeavor to eliminate the ingrained prejudices and obstacles present in the financial sector. This entails aggressively opposing discriminatory attitudes and actions, as well as supporting laws and procedures that advance diversity, equity, and financial inclusion. People also need to educate themselves on how systemic inequality and privilege affect other people's financial conditions as well as their own. We can all work together to create a more equitable and inclusive financial system where everyone has equal opportunity to attain financial security and prosperity by increasing awareness and cultivating empathy. Even while they offer insightful advice, it's critical to understand that financial experts are not the end-all be-all. The emotional side of finance and the hidden expenses of investing are only two examples of the financial realities that are frequently kept silent. We may empower ourselves to take charge of our financial futures and attain true wealth by realizing and resolving these facts. Subscribe now to unlock the secrets financial experts won't reveal about money.